steady by Infosys. The weakness that you can see today could be an account of profit taking because of the rally that we saw in the last 2 days. This quarter, we've seen a decline in their dollar revenue by about 1.4%. That's weaker than anticipated. The key reason for that is one, the full quarter impact of the RBS deal cancellation, which the management said took off a little more than 1% from their top line, and plus seasonal weakness. Margins have been a positive surprise. So margins have improved by 20 basis points to 25.1%. taking their 9-month margins to 24.7%, which is closer to the upper end of the guided band of 24 to 25%. And this margin beat drove a beat at the profitability as well. So profits went up by close to about 3%. A couple of the other internals, constant currency growth declined by 0.3%, while the volume growth was 0.2%, and the company continues to see pricing pressure. They've also tightened their constant currency band. The earlier constant currency guidance for FY17 was 8 to 9%. The new guidance is at 8.4 to 8.8%, which means the asking rate in the coming quarter is about 0.9% at the lower end to 2.2% at the upper end. But the management is constantly changing its guidance. In fact, it's the third tweaking of the guidance so far this year. They had started the year with a 11.5 to 13.5% guidance. Both the rupee and the dollar guidance has come down, but that's largely a currency play. One positive for the sector which we can take away is that maybe we're getting early signs of a cyclical uptick in BFSI. So for Infosys, BFSI was the only vertical to report a positive constant currency growth, and this is despite the RBS deal cancellation. But on the whole, numbers seem fairly steady and in line.